Bitcoin. My name is Rory, and today is Tuesday, May the 10th, 2016. And I'm very honored to have Mr. Louis Cammarosano, returning guest, who is always here with a cheery update on the gold and silver markets, and today is no different. Louis, how you doing?
Wonderfully cheery, Roy. How are you?
And you can find all of Lewis's work over at smallgold.com. Well, Louis, we got a lot of ground to cover, so we're just going to dive in head first. What do you say?
Let's do it with much alacrity. People don't understand value, Rory. That's what it is. That's the way everything is set up with paper and technicals. And look at the stock market, right? I mean, you've got the value of those companies is going down, with the stock market's going up because people are just in love with the stock market, right? They trade technicals. They don't care what the company's doing. They look at charts. It's all a matter of not looking at the fundamentals. They don't matter anymore.
Fundamentals? What's that?
Well, exactly. They wouldn't even know what to look at.
Well, they don't understand value. They don't understand the difference between value and price, and that's a big deal. And that's part of the overall ignorance of the typical investor. I mean, they just don't.
Yep.
They see that this stock is $12, even though the value of it is only $4.
Right.
And they don't understand that, and they just see that their 401k went up again,
And they think that means the economy is doing well. Well, there's an Oscar Wilde that goes with that. The man who knows the price of everything and the value of nothing.
That's what they've been trained to
Correct.
understand. That language has been bastardized into oblivion, and words are completely meaningless because everybody speaks in code,
Yep.
and that code doesn't mean anything.
Well, Rory, it reminds me of what you pointed me to with the rationing and the allocation. And that's very important. And what I have for today is when we do the Chinese gold reserves, so, the amount of gold that China added,
Yep.
I've changed that headline from China's gold reserves to the People's Bank of China. Because Chinese gold, it means the gold of the nation, all the gold. When they report, what we see as reported as Chinese gold isn't the Chinese gold. It's the amount of gold that the People's Bank of China has on its balance sheet. That no more, no less.
Right.
And they get very excited. China has more gold than that. Of course they do. No one said China, but yes, they did say China. They always refer to it as Chinese gold reserves. It's not Chinese gold reserves. It's the People's Bank of China's gold reserves. And of course there's other gold in China.
Not only is there other gold.
People's Bank of China doesn't say there's no other gold in China. They're just saying this is what the People's Bank of China has.
Right, and that's a very, very important distinction, and I'm glad that you're making that, because the People's Bank of China's gold is what's reported to the IMF, and that has a direct impact on the SDR and currencies and so forth. Whereas what they have in the SAFE accounts is not reported, and those are theoretically those could be much, much larger, and they are still part of China's overall gold holdings, but they're not reported, and no one knows what they are or how much it is.
And a lot of experts have broken down the amount of gold that goes into China through Hong Kong officially. They don't know what goes in through Shanghai.
That's
and they
correct.
know approximately how much gold is mined each year by China. And any one of those numbers is larger than the amount of gold supposedly China has. No, it's larger than the amount of gold that the central bank has. That's all.
Right.
The rest of the gold is, we just don't know exactly where it is. And just like in the United States, you don't know where all the gold is. The United States gold, supposedly how much gold is in Fort Knox, so that's about it. You don't know how much gold the United States has. And the reason that's important to know a nation, how much gold is in a nation, is because any government at any given time can nationalize its resources. We saw it in 1930, 1933 when Roosevelt nationalized the gold. He also did it in 1934 when he nationalized the silver and called on people to turn in their silver. China can do the same. So the Bank of the People's Republic of China, they only have 1,808 tons of gold, but within China, they could easily nationalize the rest of the gold in the country and roll it up into the People's Bank of China wherever they want.
And I'm glad that you mentioned the citizens, because the citizens could hold untold. They do hold an untold amount.
Sure.
I mean, we don't know.
Indian citizens, it's been estimated, hold 18,000 tons. And we know that goofy Indian gold monetization scheme, which tries to wrest that gold from them, has somehow managed to get about 2.9 tons of gold, not just from its citizens, but also from a couple of temples.
Yes.
Now, they're not really nationalizing in the sense because it's not mandatory. They're not saying all Indians, you must show up at the local corner and turn your gold in. They're saying, hey, come over here. We'll give you a rupee for this, for your gold. We'll give you
We'll
this.
pay you interest.
Yeah, we'll pay you interest. And they're looking at them like they got three heads. You say, well, what am I going to do with that?
Right.
I've had this gold in my family for generations, and now you're going to give me a piece of paper, and I don't get to get the gold back. You're going to give me more interest and more rupees later on? No, thank you.
Yeah.
So, but the difference is when a government wants to be heavy-handed, whether it's for gold, silver, any resource, they can. That doesn't mean so in theory, if you don't believe in private property rights, or they decide to dismiss private property rights, a government could be heavy-handed and nationalize. And we have it in the United States. There's an executive order, I think, signed in 2012, where the president has the right to nationalize just about any resource, whether it's food, water, any commodity, if he deems there's some national interest. And of course, they can say it's national interest just because they say it is.
Exactly. And then the National Resources Preparedness Act that you're referring to, Obama did sign that as an executive order. It was in 2012, and it's not just the resources that you're referring to. It's also your labor, your family, whatever's in your home,
Sure.
Including your home, and all transportation, everything, everything in this country. And like I said, most importantly, your labor can be nationalized, and you can
co-opted,
be told,
nationalized. Yes, this is what you have to do. Look, Truman tried to do that with the steel industry. He tried to nationalize, and the Supreme Court shut him down. But, so when people get into this debate over whether they'll nationalize or they'll confiscate gold or silver, and they say no, and they use as examples, back in 1933, gold was money, or 1934, and they nationalized silver, they needed it to make coins. They may not have the same reasons to nationalize gold or silver, but they could come up with one that we're not aware of right now. So the fact that what they did then isn't the same now doesn't mean that the power to do so doesn't still exist. And of course, they can readily call upon that if they had to.
Exactly. And
so if gold became important in the monetary scheme, then they would do it. But right now, it's not important. If silver was needed to make coins, it's not going to be needed to make coins. But if it's needed for the solar industry, well, then they would call on it.
Or to make bombs, because it's
whatever.
Silver is heavy war item. But
national interest right there.
Exactly.
Anyway, the point about China is they did add the People's Bank of China did add another 11 tons in April, and they have added about 150 tons since they reported the first time in about 6 years their gold reserves. So they're up to about 1,808 tons at the People's Bank of China.
Yeah, and this is 10 months in a row that they have officially acquired gold.
Correct.
So they're 10 months and running, and as you and I discussed last time, it seems like that their acquisitions are lighter and maybe slowing down. Not slowing down, but they're definitely lighter than when they first started.
And the reason for that is when they at the time they first started, they were increasing their reserves, Rory. They have taken a hit over the last 8 or 9 months, and they've actually, up until last month and the month before, in overall reserves, they were selling. So it's interesting that they continued to add gold, the People's Bank of China, to their reserves while they were selling other reserve assets, mainly US Treasuries. So that's why the gold acquisition has gone down. But it doesn't cost them much to add gold to the reserves, because if they're mining 450 tons a year, which is about 30, 35 tons a month, it's not that hard for them to swap yuan for that gold production and add 10 tons of gold a month. And like I
No,
say, the rest of it is probably bought and put somewhere else in another government-sponsored entity, or another one of the other banks that's government-owned in China. It doesn't all have to go to the People's Bank of China.
no, it does not.
And the next thing I have,
As far as their mining capacity, what is not known by the people that have been following China's mining, and the numbers that they use are estimates at this point because they don't report any.
Right.
And it also doesn't include any of the mines that China as a nation has purchased.
Correct. This is mining. When I cite 450, that is mining domestically in China. It doesn't include what they might own or partially own in Africa or elsewhere in the world where they own interest in mining companies.
That's right. And that could be substantial. I mean, once
easily.
again, we don't know what it is.
Yep. And they have an interest in gold. If you think about the United States, forget the audit of Fort Knox, hasn't happened since the 50s. The United States never talks about adding to its gold reserves, hasn't officially added anything in 60, 70 years. And you would think the United States can print dollars. Why would they print dollars and buy gold? They don't.
They don't.
They took us off the gold standard, and they don't want people to think that gold has any intrinsic value, any value whatsoever. And so they don't add gold to reserves. Now, they could say they have enough. You can never have enough.
Yeah, I mean, enough for what?
Exactly. Well, supposedly it's the largest gold hoard in the world, but no one has seen. Well, there's no even point even getting into, even if assuming that every last ounce of gold that the United States, and by the way, most of that gold came about from the acquiring of or nationalizing of gold in 1933. They got a good portion of their gold back then. Now, in 1934, when they nationalized silver, they got about 1.5 billion ounces, but that's all gone. The U.S. used to have a strategic stockpile. They used to produce hundreds of millions of ounces worth of coins for general use. They don't do that anymore. But that gold never made it back into coinage, never made it back into circulation.
Right.
Supposedly was all, put into Fed vaults and eventually into Fort Knox. Now, it might have come out since then, but it didn't come out in any obvious way in terms of putting coins back into circulation for people to use.
Well, I don't believe anything that the government says in regards to our gold at all. I don't believe any of the numbers. I don't believe what the Federal Reserve reports as a line item and nothing more on their ledger sheet.
Right.
And the way that they calculate it in the first place is ridiculous. So
all we know is that it used to be in coins. It was in people's hands. It's not there anymore, and supposedly it's somewhere else.
Right. And believe what you want.
Yep. Now, Roy, I don't know if you saw the Canadian Mint. Finally, because they're a public company, they don't have to do an annual report until basically halfway through the year almost. They put out their 2015 numbers, and if you'd like, I can go through them.
Please.
What the Canadian Mint has done. And then what I did was, because we've been covering the Perth Mint, the Austrian Mint, the Mexican Mint, the Chinese Mint, and the U.S. Mint, I rolled up all the major mints together and got the totals, and they're pretty amazing when you take the top four mints and you put them together. Okay, so the Canadian Mint reported. And you have to keep in mind, they were closed, Rory, correct me, I don't know the exact time period, but they were closed longer than the U.S. Mint, weren't they, last year during the silver shortage?
Yes, they were.
There was trouble getting Canadian silver maple leafs for quite some time. But in any event, the Canadian Mint set a record for selling silver for the third year in a row. They sold over 34 million ounces in 2015. It was 34,300,000 ounces of silver, which was about 18% higher than the 29.1 million ounces that they had sold, which was a record in 2014. And here's what I found interesting with the Canadian Mint noted. Although activity in the silver and gold, this is in the annual report, although activity in the silver and gold bullion markets have historically correlated, many investors have shifted to silver as the preferred investment over gold due to its affordability and, listen to this, the safety net provided by industrial demand. Now, that's something that you and I have spoken about, in that it's been demonetized to a certain extent, silver, but there's that floor of industrial demand. And it's
Yeah.
interesting that the Mint would highlight that in their annual report. The other point I wanted to make about the Canadian Mint sales, in 2005, would you want to gander, not gander, gander is to look, would you want to guess how much silver that the Canadian Mint sold in 2005? Keeping in mind that they sold 34.3 million ounces in 2015.
I would say probably around 1 million to 2 million, maybe.
Yep. 955,694 ounces. 955,694. Less than 1 million.
Wow.
So in 10 years, they've gone from 1 million to 34 million. So from being just a hobbyist type of bullion coin to now being 30. And remember, they were closed half the year, most likely.
Yeah, and they 10-ounce bars were off the market
Correct.
just until recently.
Yes. Now, the 10-ounce bars, what I found is the bulk of their silver sales, just like their gold sales, is in the form of the Maple Leaf.
Right.
They do sell a couple of million ounces of the bars. I didn't get the exact number, but they show like the most of it is in the Maple Leaf. But now, the next thing I did, Rory, I put together the 4 mints. And here's where the numbers really get dramatic. Okay. The United States, Canadian, Austrian, and Perth mints collectively sold over 100 million ounces of silver in 2015. Now, that amount represented about 11% of the 2015 global mining production. So when you take the 4 mints, that's 100,375,927 ounces, which was up. Take those 4 mints, again, 18% from the 85 million ounces that they sold in 2014, which is a record year. Then, according to the Silver Institute, global silver mining production grew 2.1% in 2015, but demand grew overall like 3 or 4%. But most of that demand growth came from these 4 mints, and they also upped the Silver Institute upped their total amount of silver demand, not just from silver coins, and coins are defined as those silver products that are made by sovereign mints, but they also upped, when you combine the silver coins with the privately minted rounds and bars, they upped that amount to 292 million ounces.
Oh, my goodness.
Which, if you take the 292 million ounces and you take the 866 million ounces that supposedly were mined, that's 33% of the global silver mining production going to silver coins, rounds, and bars. A third. Now, in 2005, it was less than 5%. So that pie is being eaten, the industrial pie, the amount of silver available for industry is being eaten into directly by the demand for silver coins, bars, and rounds. So the Austrian mint, for example, in 2014 sold 4.6 million ounces. In 2015, they sold 7.3 million ounces, which was a 59% increase. The Canadian mint sold 34.3 million, as we mentioned. The year before, they sold 29.1. And again, they could have sold more. The Perth mint, remember in September of 2015, they came out with the silver kangaroo.
Right.
They sold 11.7 million in 2015. That was up 56% from the 7.5 million they sold in 14. But again, they could have sold more had they started with the silver Australian kangaroo in January instead of September. So right now they're on pace to do about 13 or 15 million ounces in 2016. United States Mint was up 7% from 44 million in 2014 to 47 million in 2015. So add them all up, you get over 100 million ounces just from those four mints. Then if you go over to the Mexican and the Chinese mint, the Mexican mint more than doubled their sales from about 430,000 ounces to about 900,000, which is kind of ironic that the world's leading silver mining country produces precious little um, silver coins, the Mexican Libertads. I think they produced over a 20 or 30-year period about 28 million coins. So,
Wow.
so it's a ridiculous number. The Mexican Libertad often has mintages well under a million a year, the 1 ounce coin. Now, the Chinese mint, I couldn't find anything for 2015, but from 2012 to 2014, they produced 8 million 1 ounce silver pandas. This year, they're producing them in grams, not in ounces, so the coin is slightly smaller. But again, the Chinese mint was like the Mexican mint. They were producing mintages under a million for years. And in the last 5 or 6 years, they upped them to 2 or 3 million. And in the last 3 or 4 years, they've kind of capped them at 8 million. So if you add in the Austrian, the Canadian, the Perth, the US, the Mexican, and the Chinese mints, you get up to about 110 million ounces. So just from those six mints, you're already eating into about 12, 13% of the global mining supply, which, as we've talked about before, is projected to decrease in 2016 after having increased for the last 3 or 4 years. But we're not seeing any slowdown, at least in the silver coin bar and round demand. And I think you and I had seen an article that the solar demand is also projected to go higher. So again, we have this circumstance of higher demand and lower supply, and that has produced a deficit, and has produced a deficit for years, as we've seen, Rory, and yet it has not produced a higher price. As we talked about at the beginning of the show, in a normal market, supply demand, when you have an imbalance and the imbalance is tilted towards less supply and more demand, prices go higher, and vice versa. But in today's world, the supply is paper, and silver trades on sentiment, not on fundamentals. It trades on technicals, and it trades on the amount of paper contracts that are there, not based on how much silver is available.
I think that all of that is going to come to an end, and simply because Mother Nature and economic Mother Nature are both going to rear their head and say, we can't do this any longer.
I agree.
I don't know when that's going to be, but I'm saying that has to happen, because the laws of nature are much stronger than any law created by man, and the fundamentals of silver in particular are just to the extreme. I mean, we have mines that are slowing down and shutting down. We have mines that, as you pointed out, Lewis, for the last few years, they've been high grading. They've been digging faster and more than just to meet demand. And in order to not shut down, in order to be able to satisfy everything. And as you said, also, this year, everything is projected to drop off by fairly substantial numbers. I mean, and, Barrick Gold, which is the largest gold miner in the world, they projected like a 30% decrease over the next 3 years. That's a major decrease. And it's because they've been high grading all their mines, and they've been digging out as much as they can so that they could stay alive and continue to make a profit. And that's across the board. I mean, any way you look at it. So.
And as you know, Roy, the thing with gold is the gold value we've seen. People have been satisfied with non-physical gold. They buy GLD, they buy contracts, and so on. And I think what the Canadian Mint was getting at is they were implying that the value of silver has a floor under because of the industrial demand, because there will always be that substantial 400 or 500 million ounce a year need where you cannot satisfy with a contract. You can't put a contract in a cell phone. You can't put a share of SLV into a solar panel where people are cannot be satisfied with the paper promise that you can be satisfied with gold. So therefore, silver, they're saying, has that underlying safety net, and that's why people are buying silver. Because as we've seen, gold, other nature aside, was set at a price of $35 an ounce, and that price stuck from 1934 to 1970. I mean, that they kept that price there at $35 an ounce. Whereas the silver price, because there's demand for silver in the physical market can overpower a controlled or manipulated price market. Whereas in gold, other than the small 10% amount that's required for industry, they can keep the gold price kind of where they want it, as long as the participants are interested in keeping it there. But if they're not interested in keeping it there because they're conflicting reasons for keeping the price where it is, that's when the gold price can also break free from the manipulation as well. For example, if China wants a higher price, there's really not much they can do about it. We saw the London gold pool break down just because they weren't able to keep it together. But gold can be manipulated easier than silver because that physical demand can be kind of obfuscated on the gold side by telling people, well, you have it and here's your value and we'll settle you in dollars or yen or whatever the currency is. Because if people look at it as a financial asset and they believe in digitized, or they believe what they see on their bank statement or what they see on the screen, then they don't care whether the gold's there or not, most people.
Right.
But a manufacturer is not going to be satisfied by being told, oh, yeah, you have 400,000 ounces of silver. You just can't have it.
Right.
That's where the difference is.
Yeah, sorry you can't touch it. And
you can spend it, and the manufacturers, I don't want to spend it. I need to use it.
I need to use it. Yeah, and just like Keith Newmeyer, I mean, over at First Majestic, I mean, when you've got electronics manufacturer reaching out to the gold or the silver mine itself, saying, "Hey, we need to get some silver," that should tell you something is out of balance.
He's not calling up his banker and say, giving me 400,000 shares of SLV.
Exactly.
He's saying, I need from you, Mr. Newmeyer, CEO of First Majestic Mining Company, can you set aside some of your production and send that silver to us so that we can manufacture television sets?
Exactly, or cell phones, or whatever it is.
Whatever it was, right.
Yeah, I mean, and it's, look at those charts, look at those numbers, and realize that you have to protect yourself with physical assets. And that's just the bottom line. I mean, there's some people that want to get in the stock market, and if you do, that's great. I want you to. I mean, you should have some mining shares, because they're going to lead the way, according to a lot of really smart people. I mean, I know, as most of everybody knows, including you, Lewis, I mean, Dave Kranzler and I talk all the time. We do the Shadow of Truth, but we're going to do something a little different next week. I'm actually going to interview him regarding the miners, because that's something that he pays very, very close attention to. He follows the miners. He's heavily vested in them. So you guys can look out for that. I mean, and we're going to talk about nothing but the miners. And he said, absolutely. So,
well, that'll be an interesting podcast. The miners are interesting in that they are at lower prices now than they were when the prices of gold and silver were, far times lower than they are now. They've been beaten up so badly. But the upside to the miners, I'm not advocating anyone buy miners or buy anything or sell anything, is that because they're a stock, they will start to trade, I believe, not based on value. They'll start to trade on technicals. People will see them. Money will move into them just because they see the chart looks good. And they will go up, and eventually there'll be a bubble in miners, just as big as any other bubble. People will just chase them on the way up. They won't understand silver. They won't understand gold. They won't understand mining. They'll understand that the chart looks good and nothing else is going up. So smart money will move into miners.
Yes. Or what do they call it? Value chasers or something like that?
Whatever, people looking for yield. And that's just the environment that we're in. As we talked about at the top of the show, is that people are not interested in the value, they're interested in the price. And if the price of the miner starts to go up, that just attracts more attention and you get the momentum going.
Exactly.
Just why they went down too. And that's why you get in any market, you get people who try to make it efficient, like Mr. Newmeyer is doing. And he's kind of upset now that the prices of gold and silver have gone up a bit. But he went out a couple of years ago, starting and formed a company and started buying a lot of mining projects that weren't off the ground, figuring he can buy the reserves in those mining companies for very small amounts relative to the price of the market price of gold and silver, and he could own those at a time when the mining shares were depressed. And
That
that's
hasn't
smart.
changed. I mean, First Mining is still acquiring properties. I mean, that was
Yes,
one of the things that we talked about. I mean, it's not that hasn't changed. Just because the price of silver and gold have gone up, somewhat, it's still, that's a
but
capital intensive industry. I mean, you've got to have just mountains of income flowing in, or mountains of revenue, or some type of stream of money,
or debt.
or
And
debt,
you
which
got to
is even
sell.
worse. None of this is financial advice, because I'm not a financial advisor. So
Nor am I. I'm not advocating buying or selling anything. I'm just
no,
commenting on the market.
exactly. Well, Lewis, is there any other ground we should cover at this point?
I have coming up, I think, for next time. I went through and this is for the next podcast. I went through the top 20 silver mining companies
Okay.
in the world, and I went
Yeah.
through the top 20 silver countries. And there's some very interesting facts that we can go over about those countries and those companies and what they've produced in the last 5 years and what we think they might produce going forward. So I think we'll save that for next time.
Okay. Yeah, that would be cool. Maybe we'll pick it
We
back
could do
up next week.
Sure. I'll have those posts up this week,
Okay.
later in the week, and we can digest them, and then we can prepare something for our listeners next week.
Okay.
And
Yeah.
then the week after that, we can go to Russia's reserves.
Okay. Yep. Because that'll put us right back on track. So.
Okay.
All right. Well,
Thank you very much.
It's always a pleasure, Lewis. And you can find all of Lewis's great analysis over at smallgold.com. And I carry a lot of his work. Unfortunately, I'm not able to carry 100% of it, but you can find a lot of it at thedailycoin.org. Lewis, it's always a pleasure, and I look forward to speaking with you next week.
Likewise, Rory.